the percentage of top line we can reach, say, in next 2 years?
See, Sanjay, if you see overall, the business itself is growing. So it's growing both on the domestic as well as on the exports. But if you see till last year, I think last year Q1 our exports would have been 20% of our revenues. Today this quarter it's almost 24-25%. But if you see in value terms, it's almost double. So, or at least not double, but at least 50% growth. So while the percentage is growing, but the absolute number is growing significantly. So I think we would be happy if the exports absolute number keeps growing, and if it's within this 25-30% kind of a range, I think for the next 2 years, that's what is our target number.
Sanjesh, does that answer your question?
I think we lost him. We can go ahead.
Sure. Ladies and gentlemen, to ask a question, you may please press star and 1. We have the next question, which is from the line of Bhargav from Ambit Asset Management. Please go ahead.
Yeah, good evening, team, and thank you for the opportunity. Sir, my first question, just continuing on the exports, especially on the Bangladesh front. How big can this opportunity be on the textile side, sir?
Bangladesh is a market which is bigger than the Indian market, and but there were also a lot of forex issues which is now considerably eased. So we see that the opportunity in Bangladesh is bigger than the Indian opportunity. We have a team of people present there. We have now a new distributor, and we think that progressively we should see better traction in sales to Bangladesh than in previous quarters.
Okay. So second question relating to your institutional business. So at what level can we expect this business to become break-even? And if you can share some insights into what could be your sort of 3-year plan to make this business much larger from here on?
The institutional cleaning chemicals this year, we're expecting it to be 250 crores. The first quarter was about 60 crores. So we are lying, and we have had a substantial growth in that product, in that business. The focus would be, on all products related to the institutional cleaning, hygiene, disinfection, and also food service. So we are going as a basket by providing not only chemicals but a whole range of products together which can go into the institutional, cleaning and hygiene and disinfection line. So airports, malls, food service, hospitals. These are areas where we want to focus for this in the next financial years. I think in terms of percentage of growth, because this is a smaller base, from 150 to 250 crores we are growing, and we should see a healthy growth year on year on this segment, primarily because the market is big and the focus on cleaning and hygiene and disinfection is increasing. That is why we are very bullish on this business. This business is a very difficult business because it requires a lot of service, a lot of people on the field, and also a lot of equipment. For example, if you go to a laundry in the hotel industry, we need to have dispensers to dispense chemicals to the batch washing equipment. And even if you go to a kitchen and there is a big automated dishwashing line, we need to provide chemicals to dispense those chemicals in an automatic manner on big machines. Other than that, even in facility management, for example, to airport, we need also, because the manpower is unskilled, which are contract labor, which is coming to the facility management companies, we need to provide dispensers so that dilution happens. We supply, chemicals which are concentrated. So, for example, you have to add between 5 ml to 20 ml per liter. So this is, a service concept rather than only chemicals. There are other products which we go as a basket for this industry, and we are happy to not only focus only on chemicals, but to go as a basket. we are planning to launch products based on, kind of povidone-iodine, where the common big brand is Betadine, and a lot of other products in the near future. Hospital hygiene also is something which we think could grow in a big way in the future. So year on year, we should see much higher growth than the consolidated growth. That is what we foresee in the future.
And sir, any gross margin guidance or working capital guidance which we can give once the business crosses maybe 400-500 crores?
I think the business itself is a higher gross margin business for us. While there is a little stretch on the working capital currently in this business, so we'll probably understand a little more of the working capital size once we reach that 500 crore number. I'm sure it will be much healthier than what it is as on date. But currently, to give you a guidance on what the working capital would be a little difficult for us.
And in terms of people on ground, maybe more than 200 plus people on the ground?
Yeah, more than 200 people on the ground, yes, already.
Oh. Great, sir. Thank you very much and all the very best.
Thank you. The next question is from the line of Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you so much. Sir, what's the capex that you're planning for this year? Cash capex?
The cash outflow will be only for these two large capexes which we have announced at Unitop and Rossari. So that's the only the major capex outflows that's going to happen. Apart from that, we have a additional small capex of reagent, which is a vitamin premix and minerals facility. So overall, we'll have an outflow of close to about 100 crores.
And sir, secondly, on the sea freight issue, the container sea freight issue, what's the implication for us? Basically, the domestic market would probably benefit, probably some impact on the export market. But if you can provide some context here, please, sir.
So right now, Dhruv ji, namaste, main Chari bol raha hu. Right now, all our contracts we are going on FOB and we are calculating the rate available today and then telling them that we have arrived at the CIF price based on this much amount of container freight. Now, at the time of actual dispatch, if the freight is lower, we'll reduce the CIF price. If it is higher, we'll increase the CIF price, and we'll be open and transparent that we do not want to earn from the freight. The freights are now nearly 2-3 times more than what it was, but they seem to be stabilizing now. Last 1 week, we did not see too much increase in what we had the week before, but also we are also seeing shortage of containers primarily because our freight agents are saying that the whole China is diverting all containers to shipping of electric vehicles. There's also delays because vessels are not available, containers are not available. So normal shipping times have increased. Now what is happening is when containers reach late to our customers, they get consumed late, and then we have the next orders get delayed. And customers want to try out some other suppliers जहाँ से उसको जल्दी freight मिल सकता है, जल्दी availability delivery मिल सकता है. Overall, I think the whole of world is grappling with this problem. So it's a new normal till it stabilizes.
But our domestic market, which is about 75%, that should ideally benefit because for the competing products have become more expensive now, at least whatever was getting imported.
So if you see, our three segments, so HUPC, textile and animal nutrition, we had a lot of domestic customers because in all the three segments, all the multinationals have local manufacturing facilities. So even in our imports, if you see imports, we have very less imports compared to our exports. So if you see exports is, on an average 120 crores, the imports would be 20-25 crores in a quarter. So I think similar will be the case for our competition because domestically now a lot of raw materials in the segments we work in are available. To give one more example, for example, acrylic acid or butyl acrylate were primarily imported earlier, and now domestically BPCL practically imports अभी बहुत कम हो गए. Similarly, acetic acid का देखेंगे तो acetic acid this month we are buying only from GNFC because the GNFC prices are much better than import prices. So India is coming of age in terms of a lot of raw materials availability, and pricing also has become very competitive.
All right. Sure, sir. Thank you so much and all the best. Thanks.
Thank you, Dhruv. Bye.
Thank you. The next question is from the line of Chetan Thakur from ASK Investment Managers. Please go ahead.
Good evening, sir.
Good evening, Chetan ji.
Good evening, sir. So just two questions. One was, what is the contribution of agrochem to this current quarter revenue and the same number last year? So just to get a sense of what has been the growth in agrochem per se. And second was on working capital. How has that played out this quarter? Have we seen some release of funds from there?
Chetan ji, with the agro, we do not have exact figures, but because we don't bifurcate revenues based on sub-segments in the HPPC segments. But this season has been better than last season, and we have seen sales better than last season. So the monsoon has been, very good, and our all agrochemical formulators and the big agrochemical manufacturers, formulation manufacturers, foresee a good uptake in the next 2 months. As a percentage or value, we do not have exact figures to give to. Collections have also been better, but I think it is nearly the same as in the past. So it is not worsened. That is a good news.
Understood. And so working capital, we've seen some release or nothing materially in this quarter?
So working capital is pretty much same as what it was in March.
Okay.
We are taking some steps now. So we hopefully by September we should see some release of funds coming out of working capital.
Understood. Okay, sir. Thank you so much for this. All the best.
Thank you.
Thank you. The next question is from the line of Aditya Chedda from InCred Asset Management. Please go ahead.
Sir, first question is on the other expenses. We've seen a sharp increase sequentially. So would you highlight if there is a one-off or just in detail what these increases in other expenses are?
Yes, this quarter we have about I think about 4-ish crores of one-off expenses that has got booked. One of it is on the maintenance side. In Tristar, we had a plant shutdown for about 12 to 15 days. So that's where the maintenance costs have gone up. Apart from that...
Sir, sorry to interrupt. I request you to please come closer to the mic, sir. When you
Yeah, is it better?
Yes, much better. So please go ahead.
Yeah, so we had a shutdown at the Tristar facility. So we have some expenses booked on the maintenance side during this quarter. And we've also initiated in the last quarter some, consulting work for restructuring on our HR front. Now with so many multiple businesses and a lot of new people joining in, so we had taken some professional help in restructuring, reorganizing, bringing in new performance management system, job description, etc. So some of those bills have got expensed out in this quarter. Apart from that, I think partly freight expenses have gone up. There have been a lot of spend in the last 3-4 months on a lot of exhibitions, some of which Mr. Chari talked about in his opening comment. And the overall travel expenses have also gone up during this quarter. So I would say the selling and distribution related expenses have gone up in this quarter. So that pretty much makes up for the increased other expenses that you see in the numbers.
Got it, sir. And my second question is on the CapEx, which is coming up in a phased manner. So at current revenue run rate, we are looking at a high single digit implied revenue growth. But if you could talk more about how this CapEx will come on board, if you can give some more details, whether it is from Q3 or Q4, etc., that would be it.
So most of the expansion is based on ethylene oxide as our raw material, and as we had announced in earlier calls, we are expecting our expansion to be completed by March 2025. Now we should, we are waiting for the expansion of Reliance for ethylene oxide to happen simultaneously. And the first, because the customers will be big, giant companies, both in home personal care, in oil and gas, in pharma. So we would take some time for approvals. But I think, as we have said, Ketan sir has said in earlier calls also, FY26-27 should be the right year for us to see 100% utilization of those capacities.
Got it, sir. That's it. Thank you. That's it from my end.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So first question is on the institutional business. So we have a target of 250 odd crores. And I believe that in terms of margins, probably it's lower margins than our company-wide margins. So what could be a critical revenue level from where the operating leverage will start kicking in, and probably the margins would be at a company-wide level? Thank you.
So, Rohit, as I talked a little earlier also, I think this business now, at least for the next 2 years, needs to show a strong growth prospect. So we are investing in terms of people and other resources quite heavily in this. Some of the new additions in terms of people on the ground, if you see, are mostly happening in this business. So currently, as we said, we've done 60. We are expecting to close this year closer to 250 odd kind of a number. I currently don't have the exact number then, but I have a feeling that this number needs to at least double in the next 2 years. And maybe 2 years down the line, we will start seeing some operating leverage flowing in. So maybe closer to a 500-600 crore kind of a top line is when this business will really start showing some positive traction. And then post that, I think it will really bump up our margins. Currently also, it's not that this business is not giving us, but the level of margins are slightly lower than what the company averages are.
Right. Got it, sir. So second question is in terms of the textile chemical business on the exports front, Bangladesh and Vietnam. So if you can just let us know in terms of what is the size of employees that we have currently, in terms of maybe 3 years or 5 years down the line, what is the kind of revenue that we are looking from these markets, given the investments that we are currently making in terms of manpower and keeping local professionals out there. So just a broader perspective would be good. Thank you.
The Bangladesh, we have about 6 people working in the Bangladesh office in the sales. Because our sales are low, we are gradually scaling up, this thing. The textile exports as a whole, we are expecting it to grow primarily because destocking has happened in the American market, and our customers are having in India and as well as Bangladesh and other countries are having good orders for the current financial year.
Sure. So just one last clarification. We have incorporated a subsidiary in Dubai. So what's the strategy behind it?
We've incorporated the subsidiary in Dubai primarily, for any global expansion that we may plan going forward. So rather than holding it through India, we've currently incorporated this subsidiary. Any new setup which we may plan to do in any other country, we would like to do it through this Dubai subsidiary. So that's the plan as of now. We are looking at some of the geographies. It's still in the planning stage, where we would like to set up some small facility. So we'll do that under this company in Dubai.
So will it be a manufacturing setup or will it be purely a marketing or selling?
It will be a mix of both. We may start off with a marketing facility, and then maybe as the business grows and as we see some traction in the customer base, we may even set up a manufacturing facility.
Sure. Thanks a lot. That's all, and the best of luck, sir.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. So I have a couple of questions. So first of all, on working capital. So over the years, our working capital days has been constantly increasing. So why is this happening, and what should we expect in future on this front?
If you see our business before our acquisitions and now the acquisitions is mostly based on the surfactant business. The surfactant business, like Unitop and Tristar, is also where we have to buy EO and also the hydrophobe which reacts with EO, like lauryl alcohol or nonylphenol or tridecyl alcohol or any fatty acid. These are all purchased on advance terms, and we have the normal standard 90 days terms with our customers. So we cannot compare apple to apple what Rossari was 4 years ago before the acquisitions happened and what it is now. And as we said in the last two earnings call, this between 90 to 100 days is the new normal which we should consider.
Okay. And with regard to demand dynamics, so how are we seeing the demand dynamics unfolding for textile and HPPC segments, and what growth should we consider for FY25?
So both the markets we see healthy demand, both domestic and in exports. As I said earlier, the home textile market, especially from the US, the orders are full with our current customers in India and also in Bangladesh. So we should see higher sales in both these countries, but other countries also. In the HPPC segment, again, we see exports and domestic market both having good demand. So we see both the segments should continue to do better than what it was last year on quarter-to-quarter basis.
Yeah, and one quick question about utilization. So what is our current utilization?
So, Pradeep, in the ethoxylation side, our utilizations are at 90% plus at both the sites of Tristar and Unitop.
Our peak utilization is somewhere around 65-70%, and we are operating at 90% of that 75%, right?
No. See, we have capacities of ethoxylation, and we have the other capacities of reaction, etc. So on the ethoxylation, which is our core activity, our plants are working at almost 90%, and overall, if we take an average, we are at about 55 to 60%.
Okay. And the other one is that we are doing two capexes that we are doing. So what would be the revenue opportunity from those capex?
So at a peak, these would give an asset turn of about around 4.
Okay, thank you very much.
Thank you. We have the next question from the line of Bhavin Soni from Anand Rathi Share and Stock Brokers Limited. Please go ahead.
Hello, good evening, sir. Thanks for the opportunity. Am I audible?
Yes, Bhavin.
So I just wanted some clarity on the freight expenses. You mentioned that other expenses are one-off with respect to the exhibitions and travels and sales and distributions. But can you just give a breakup of how the rate increase on a Q-on-Q and YOY basis?
Offhand I don't have those numbers, but freight is an increase. Is almost, I would say about, if you see YOY, it would have definitely increased about 35 to 40% of what it was in Q1 of last year.
Okay. And how do you see it going forward? Like for now, you have said that it's stable since last week, but for this quarter and next quarter?
In terms of freight, we see at the same levels as we said now, based on June and the first half of July. We don't increase destination-wise too much increase in freight. The container and the shipping freight availability, ships availability also is little better, not the same as like in January to March quarter, but I think this is little better than previously. Okay. And sir, any one-offs or spikes in employee expense, because they also increased around 17% YOY and 14% Q-on-Q.
So that's not a one-off increase. There we have brought in people through the year between last year and current year, and of course there has been a general increments that have happened.
Okay. Thank you. That's it from my end.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our team or CDR India. Thank you once again for taking the time to join us on this call. Have a good evening.
Thank you. On behalf of Rossari Biotech Ltd, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.